Hello, I'm Julian Ranger. I'm going to sort of half compare the panel today. Before I do so, I was asked just to give a brief introduction to the sort of eco-chain of a startup. Now, for some of you, this is going to be fairly self-evident, but for others it may be a bit new. So the idea is you start at the very top left with your wonderful idea, and then you proceed through various stages till you get to your exit if you don't manage to do it before. So between building the team, doing your initial development, your business product market fit, the growth stage when everything's working beautifully and you're making lots of money. On the right-hand side, there are lots of sources of money. Now, there's no particular route through this matrix, and our experts will talk about it, and they come from different stages. So you have the friends and family, also known as the triple F because they add fools in there, which I always think is a little bit off, but there we go. So friends, family, and fools. You may come back a couple of times to attack on that. You then come down, you might get a grant, you might join one of the accelerators or incubators that are here. You might get angel funding from someone like myself, and you might come back and get follow-on funding from that, through to seed funds, and then our wonderful VCs. I was going to put devils there instead of angels, but they are actually very nice, as long as you're on the right side of them. You might get an investment from a business because of strategic fit. You can do it via your own organic growth. So any of those kindly given to me by Seedcamp are some sort of rough numbers in the States for those different stages. So sort of $50,000 from friends and family, $100,000 coming in the accelerator incubator type side to the angels, 300K, down to your seed funds, 500, and then your VCs coming down there. But of course, all businesses need help, and there's lots of sources of help from government and all the rest of it, from events like today. Accelerators and incubators are interesting because they're on both sides of the puzzle. They provide that help, but also provide some money, mentors training, and obviously your board and advisors. So we have 5 illustrious people on our panel today. What I'm going to do is start with Ian on the far left. If you could each introduce yourself, a couple of minutes, and your general view of that eco-chain and where you fit in it and what you think. And then we'll open the floor to questions. And I've obviously got a few prepared in case you're a bit slow to start with. Fire away.
Okay, so hello everybody. My name's Ian. I'm a co-founder of Launch 48. Launch 48 helps people to start businesses, so that's why we're really at the very early part of that chain. The concept behind Launch 48 is that you can come to Launch 48, you can have an idea or not have an idea, and you can find and work with other people on your idea or somebody else's idea. Where Launch 48 tries to differentiate itself is the level of mentoring you receive. It's a highly structured event. What that really means is that we give you lots and lots of kind of coaching as you go through the event, which for people who I guess have probably started lots of businesses, you're probably thinking, oh, why do I really want somebody coaching me through every step of a weekend event? And to be honest, it's probably not really the ideal event for someone who has run a very successful business before, because a lot of the things we'll be coaching you on you already know. But where it's fantastic is if you're just trying to find your feet, or you want to kind of subject yourself to what it's like starting a business. Launch 48 is kind of like throwing you in the deep end. We have a saying: we'll give you advice, but it's up to you whether or not it's up to you whether or not you take it. And that's definitely the way in which we truly believe. Like, it's fantastic seeing teams completely disregard what mentors tell them, to then see them crash and burn about 3 hours later, to then remind them of the advice a mentor gave them, for them then to kind of have the maturity to understand what the mentor was talking about. But I think it's fantastic to go through those types of situations in such a short period of time. What else was I meant to talk about, Julian? Okay, great. Who's next?
So hi, my name's Jon Bradford. I run something called Springboard. Springboard is a 13-week boot camp targeting early stage businesses. Typically, they already have products, or more from a practical perspective, demonstrated an interest in actually doing something. So one of the things we do to ascertain whether we take people on the program or not is, have you actually built anything? Doesn't matter what it is, but how committed are you to what you're doing? Don't come to me with, I've got this great idea, can you give me money? It's not going to happen. The other key constituent ingredient is we bring together very small sums of money. We give our teams essentially 10 or 15K, depending upon whether they're 2 or 3 person businesses. for which we take a 6% equity stake. But the key magic ingredient is we bring a massive deluge, I think that's probably the best way to describe it, of mentors who come and support the teams at an extremely early stage. I personally believe that the ability of teams to progress themselves by speaking to as many smart people as they practically can in a short space of time is incredibly valuable. The notion I describe in that is, if you imagine investment capital is like rocket fuel, it gets you from A to B faster. If you're pointing the damn rocket in the wrong direction, you're in trouble. Mentorship, the smarts of the people around you are the people who will help give you the guidance to point the rocket in hopefully the right direction.
How many of you guys had heard of Springboard or Seedcamp before today? Okay, so maybe the other way. How many of you had not heard of Springboard and Seedcamp? So a few of you, just very few of you. All right, excellent. How many of you have attended either a Springboard or Seedcamp event of any kind? All right. So I think, I don't want to necessarily reiterate some of the things that Jon said, but if you think about where Springboard and Seedcamp exist in the ecosystem, we are helping companies that already have a product and a team get the polish necessary to get funding for the growth component of it. That's kind of our core function. Now, Seedcamp and Springboard differ only in some of aspects of how we specialize. For example, Springboard's going to be having a mobile specific event coming up. When is it again? September.
Applications are shut.
So we have a more sort of general approach, and I guess the point that I'm making here is that there are many programs like ours, and we fit into this range of capital providers and mentorship providers. I mean, I can go into the details of what our program's like, but that's effectively what it is. We look for companies that are at product stage, the team stage. We help them get the right mentoring and the capital necessary to go to the next round of financing through a program. And, ours is slightly different than Springboard's, or slightly different than Wyra's or whatever. Ours doesn't have this short-term thing that is more concentrated and more intense like Springboard's. Ours is more spread out over the year, but over buckets of time. So it depends on what you're looking for. But that's kind of how our group of programs sits into this ecosystem, and Seedcamp's just one of them. And so we're a team of 4, and the dynamics of it are very similar to Springboard in the sense that we provide capital for a percentage of the company, and then you enter into a program to help you get to the next phase in your company's growth. That's a little bit about us.
So my name is Eric. I'm from Startup Weekend. Anybody heard of Startup Weekend? Anybody been to a Startup Weekend? Wow, fantastic. Okay. So we're at the very beginning of this stage of this process. It's all about the networking and the team building. It's a weekend-long event. You come in on the Friday. There's about 100 attendees. You pitch your idea. You have a minute to present what your idea for a startup is. Then the 10 or 12 best ideas are picked. Teams form around those ideas. And then you spend the next 54 hours doing the best you can to make that into a startup. That can mean building a prototype, a click-through, market validation, business plan, whatever it may be, to just get as much as possible done within that weekend. Then on the Sunday evening, we have a panel of judges that you present to, and you get feedback. There's a few prizes. But really at its essence is it's a networking event. You are there to meet people who are as ambitious, as talented, and as you are, and that's what it's about. We're an organization based in the States. I think we've held about 200 plus events worldwide in probably, I think, every single country in the globe. I I think a total of 54,000 attendees. I've recently got involved in the past 6 months, and I'm looking to hold an event in London every 2 months. The next one's mid-September. By the way, if you want to get involved either as a sponsor or as an organizer, please come and speak to me afterwards. And I think that's about it.
Good evening, I'm Ami. I'm founder of the Innovation Warehouse. I'm just in line with the sort of questions that came up before. Has anybody here not been to an Innovation Warehouse event? Okay, that was a trick question. Because we're in the Innovation Warehouse, okay? For those of you who are not aware of that. So I would put ourselves sort of, well, we can see along there sort of between the 100K and somewhere after the 500K part of that journey. In a sense, somewhat equivalent and somewhat different to Seedcamp and Springboard. One of the differences that we provide the dimension of space. So part of what you get over here is you're in a community, you're in a co-working space, and you get as much help from each other as you do from anybody else who might be an investor or a mentor or a trainer or whatever else it is. So that's a kind of slight difference in terms of the approach. There also isn't a program. There's a kind of, you get as much or as little help as you want. And we also do things like this and engage with other. I think we sponsor things like Startup Weekend and Launch 48, host a lot of other stuff. So there's a lot of that stuff going on here. I think that's probably it for the moment.
Okay, so what we're going to do is open up to questions from the audience. So, well, there is one straight away. I was going to say, while you're thinking, I was going to ask one, but go straight for the questions.
Hi. Bearing in mind this is London New Finance, I guess finance generally has been a difficult area in terms of investment over the past few years, or new financial innovation. A lot of the financial innovation will tend to come from people that have worked on business side or know something about the business side within the banking industry and want to get out and potentially seek out and take advantage of the opportunity that's occurring right now in financial services. What do you think their prospects are, and how do you think they should go about finding the right technologists to work with them, given that you are all technology-based organizations in some way, or you help technologists out? But business guys don't necessarily always know technologists, and they need a CTO in order to even embark on this journey here to get funding somewhere. How should they go about finding one?
Okay, so who would like to take that? In fact, Carlos is going to go straight in.
The reason why I wanted to speak first was partially because we just had an event that two of the guys that are here went to, actually three of them, because I recognize another face there, and it was an event that we call FinTech. And it was very much what you just said. It was an event around FinTech where people would present, business guys would present their FinTech ideas, and we made sure that there was a mix of hackers that would help them execute that idea. And at the end of the weekend, we had some proof of concept stuff. Some were serious, some were not so serious. But that's kind of the kind of place you could find a co-founder. A startup weekend, a Launch 48. You go, you pitch your idea, and you find people that are interested in it. Short of something like that, you build a company around a validated business proposition. Meaning sometimes you don't need the tech to validate the business proposition. If it's especially like a commercial agreement between two parties that you can execute on the phone or on paper, if you have that established, then it's a lot easier to go and pitch to a CTO, because all he's doing is designing a technical process around an existing a viable commercial relationship. So that's a lot easier than having to start from scratch. And if you have that, you can go something like Silicon Milk Roundabout and pitch that because you already have effectively a functioning company with potentially functioning revenues. You're just lacking the technology infrastructure to make it more efficient. So those are two venues that you could follow, but maybe you want to speak specific to how your weekends perhaps bring together business people and hackers.
That actually does remind me, one thing I didn't bring up earlier, our events, we allot 33% of the tickets for developers, 33% for designers, and 33% for business non-technical, which we find gives a really good mix. It gives the opportunity for people to form well-balanced teams. And I would agree also too, you don't necessarily need the technology right away. There's a lot that you can get done with a click-through. And by that I mean something that just sort of has the screens about what you want that user experience to be, but doesn't actually do anything. But that is a very important starting point to go around and get people to know what you're trying to get done, especially even to a potential technologist who wants to kind of understand what you want to achieve. If he can see some sort of prototype that doesn't necessarily, have the back end working, it's a lot easier to just kind of communicate with you and say, okay, well, this is what you need. This is where you should look to get it done, et cetera, et cetera. And yeah, of course, attending a startup weekend would be a good way to meet those type of people.
Ian, if you'd like to give an answer, and somebody else start thinking of your next question, because after Ian, I shall ask.
So just to kind of run on the back of what those guys have said, but to maybe apply it a little bit more to a practical case study. At Launch 48 events, although we also encourage kind of a balance of skills, and but it's getting harder and harder. Like, I'll be honest with you guys, developers are some of the most sought after guys. I mean, you guys hopefully have some knowledge of the finance industry, and you're probably aware about how well they pay. Well, I mean, most of the developer friends that I know are pretty much on the edge of, should I walk away from a job that's paying me more than I probably ever earned before in my life and go and do a startup, right? So how are you going to counter that? And I think, to be honest, one of the challenges that you're going to have about doing a technology business in London, and this isn't me being a pessimist, if anything, this is me being an optimist, is to overcome that problem, because it's a fundamental problem if you're going to do a technology business. And what you'd hate to do is be put in a position, which I've seen way too many entrepreneurs in this situation, where they've put all of their hopes on one technical guy, and he gets an offer from a bank. He's like, well, getting paid nothing, getting paid like enormous money. Not really sure if this is going to work, but I know the bank's going to pay me. And so I think, as entrepreneurs, like, I know if I was investing, I'd want to see how are you guys going to have a backup plan. Like, are you capable of resourcing your business another way? I'm sure Seedcamp, although they'd love to look for devoted team members, they'd also probably like to know that if one core team member walks out of the room, the other guys aren't going to fall in a heap on the floor, that they're going to be able to pick themselves up, find other resources. And I think that's a really key skill. I wouldn't necessarily assume that, tomorrow all of a sudden there's going to be just 1 million more developers floating around London and we're all going to be able to go and, pick whichever developer we want. I think what you should do is probably think about, like, well, how can I get around this problem? What are my options? What's viable? And I think when you start thinking that way, you'll probably come up with some really interesting solutions. And to be honest, those types of solutions and fallback plans are what you can go to mentors or people who have done things. They can probably give you advice on, whether or not I think that's a good or a bad way to do things. But definitely coming up with alternatives rather than just pinning all your hopes on one kind of strong CTO that's just going to drive the entire product and you're going to be able to focus on what you're comfortable with. That's not really how startups work at the end of the day. Like, everybody's got to be able to at least do something of everything, hopefully.
Thanks, Ian. Could you pass it over to Ami, who has just got something to add? Of course, you can, always go to subcontract your work. I don't know if that's what Ami's going to say.
No, just an observation. I've come across a lot of technical guys who put a product together. They've got something working. It's got customers they've got traction on the internet. They've got some customers. They're proving their concept, and now they want help to grow, basically. And they're looking for, I don't know, £50,000 or £100,000, and the investor's sort of asking questions. Well, can it do this? Can it do that? Show me it doing this, and show me. so many times I've seen people with product being asked to prove this and prove that and prove the other. And so many times I've seen people who've got no technical background put a business plan together and raise £200,000 just on the back of a business plan that has a good traction, a good possibility in the market. Okay, in terms of perhaps having to give away a certain amount of equity and so forth. But I'm not suggesting anything. I'm just saying that I have seen that over and over and over again, where people have been smart enough to get a decent amount of money where they can go and afford to outsource and hire technical people, and the ones that have kind of done it themselves find it a lot harder to raise money.
Thank you. We'll take a second question. I'm not sure I'm going to keep count all night, but...
Yeah, I'd just like to take a more general look at that, because I think it touches on a number of issues, really. In my experience, and I just met a team this afternoon looking at startup from a non-technical background, and I think it's very unwise for people to get involved in trying to set up a technical company when they don't understand tech and don't have core founders. And I think that particular problem goes to the very root of what's happening in the startup community. And I think the fact that you guys are all in a room together today gives a great opportunity to make this comment. And I think one of the things the startup community does very poorly is we don't talk to government. We don't talk to government about what we need and about how government can step in and help solve our problems. And Google does that a little bit for us, but what I don't hear the startup community doing is going to government and saying, hey, we just don't have enough coders coming out of our educational institutions. And it would be great if you guys could get together and say, look, there's an opportunity. We're all here together today. We can start putting the germ of a lobbying organisation and a lobbying effort into what we're doing, because I think that's really lacking. And I think that without that feedback into the education system, the right people aren't going to come out with the right kind of qualifications to build the next generation of startups. And it'd be really good to get you guys comment on it and to see whether you share that vision of bringing the educational sector in to help form that next generation of startups.
Okay, I'm going to slightly broaden that question then, which well, I'm going to even broaden it even a bit more. So there is an issue that is potentially facing the chain that we have, which is lack of technical resources. So do you want to comment on that, or any other issues you think that are affecting that chain and where we're going? So I'll let you broaden it to cover that lack of resources or anything else on that chain.
I'm aware of a lot of conversations that what you're describing is being brought up on a regular basis. I'm aware of the British, I'm going to get this wrong, the British Institute of something, software developers or something. I know who it is. There's a friend of mine who's on the board. Yeah. Who are acutely
Put
aware
the microphone
of this.
to the Connie. That's it.
So the biggest problem that we have with that is a long-term education issue. There are initiatives around, such as Apps for Good, which are trying and make an impact. They're cheating by actually doing an after-school event, because then you don't have to worry about curriculum. There is, correct me if I'm wrong, what was it, something state that Emma used to run?
Young Rewired State.
Young Rewired State, which was Rewired State aimed at the younger generations. But yeah, I agree. I've got bluntly a 7-year-old, a 5-year-old, and a 3-year-old. I'm trying to figure out how I teach them to code so that I can retire. Because there's such an enormous lack of talented engineers in this country. That's the other quick thing I always say to people is, I think people undersell themselves in this country. I think we talk about software developers, yeah? As far as I'm concerned, the last time I looked at what a developer was, they build crappy product and crappy housing and then flog it on for a massive profit, yeah? If you go to the US, you don't get called a software developer, you get called a software engineer. If you go into Google, they talk about software engineers. Engineers are people who build product and sell product, yeah? Developers are people who buy crappy pieces of land and then sell it at an enormous profit. So I don't think people do themselves a favor. And engineering is a talent. Engineering is something which requires effort. And I think the other part of the equation that I'll blame everybody now is Steve Jobs, which is iPads are great. it means that the world now can use, my granny, who's 80-something, can use an iPad. But it's now simplified technology to a point that it actually underestimates the value and the technical competency to actually build the stuff that sits below those sorts of things. So I think everybody can help. I think there's a long-term problem. I think it's being raised. I think it's probably not being dealt with fast enough. I spend my life talking to people about how far can you, I mean, I'm not talking about people who are now outsourcing their development to Africa for mobile technology because they know more about it than anybody else. And Estonia is now too expensive, which is ridiculous.
John, I'm going to call it time on there. Does anybody else want to add to that or have any other issues which might have did? Ian?
I think just really quickly, and you know, just to kind of, while John jumps off the soapbox, I'll jump on. But it's amazing how many parents you meet who don't want to give their kids computers. I think that's a problem that maybe we want to address. I don't know. I know that I don't know anybody else in this room, but I know that it was playing with my computer when I was a teenager, where I didn't have anything else to do. As in, I had school, but you know that's what 6 hours a day. It's lesson work, and that's kind of where my interest in technology came from. And to be honest, it's where I learned to program. I find it hilarious how I meet lots of parents who are like, we're not even going to have a TV. I'm like, well, that's fantastic. Technology's really going to take off in this country if we don't give our kids technology.
I will take people off the soapbox and wait for another question. I am just going to add one thing, though, that is I know there's quite a lot of initiatives. There's the GoTo Foundation and some others coming up. But I think the problem with startups is they have to face the now, and anything else the government can do is going to be years down the line, and that's why you get that sort of who's caring right now versus later. But anyway, let's go for a third question. Anybody hands up? One over there.
This is to Seedcamp, but anyone else? Just want to know, what do you consider sort of key to rapid growth at the moment? What do you recognise amongst the startup community as really integral?
So what causes rapid growth and is key to that?
What causes rapid growth? So I think the question's actually probably two questions compacted into one. One of them is what variables contribute to rapid growth. Another one is what areas are showing rapid growth right now. Now, what areas are showing rapid growth right now tends to be a function of what trends are, what people are liking, what people are funding. You don't always know exactly what growth is when you see it on TechCrunch. You don't know if a funding round implies that there's growth or there's a thought that growth will happen. So I'll steer clear of that half of your question, and I'll focus on the first half of your question, which is what attributes do I see in companies that are likely to have high growth or tend to, at some point in the future, have high growth. So one of the key things that I do when I'm looking at companies for inclusion into Seedcamp program is evaluating the quality of the team. The quality of the team typically is something that most people have a gut feeling for in a very short span of time, but if you wanted to dissect what that gut feeling is made up of, it's how people answer questions, specifically questions about growth assumptions, about metrics, understanding markets, understanding what the key performance indicators are for their sector. For example, are you targeting a B2B customer? How many is it a vertically integrated set of customers? Like you have only 2 customers, maybe General Electric and Procter & Gamble, and that's it? Or is it a series of very small customers that you've aggregated and you understand that it takes about 3 months to sell into this one or that one? So each one of these questions I ask to try to see, I don't necessarily know what I'm asking, I just fish. And then as I fish, I see how deep the understanding is of a founding team of what drives their business, what drives the growth in their market, how they're tracking this from the metrics perspective, what kind of dashboard analytics they have, what their sales pipeline is, what their cost of acquisition is for a new customer. And there's a high probability, or high correlation rather, between a team that is capable of doing that and eventual high growth, whether it be with what they're doing there or after a subsequent pivot.
Ami, do you have something to look at? Oh, well, go to John while you're next to John.
just to re-emphasize that point, I look at it in terms of people who are just obsessive about what they do, yeah? And also the second part, which I implore upon other people, I'm really bad at myself, is I love people who are very certain, even if it's wrong, about what they do, but actually having a conviction about describing, this is what it is, this is what it looks like, and actually keeping their answers short. There's a weird thing, which is the longer your answer, the more people start to tune out. Unless there's a complete, like, I can tell you a story about how this thing works. But what typically happens is when I ask a question or Carlos asks a question is people who rabbit on a lot, actually it just feels like they're just filling space because they don't want another hard question.
In which case, yes, look at that, stopped immediately. Better pass on to Ami. Ami, what characterises the companies in the
well, I mean,
IWE?
following on from Jon, there's only one thing really, and that's sales, 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 sales. That's what it boils down to.
Okay, thank you.
Bia, did that answer your question?
Yes. Yes, he did. Thank you.
Perfect timing. And who's next up for a question? One over here, gentleman over here in the row.
We are trading our own money since 4 years, and to broaden our space, we apply for FSA application as a hedge fund right now. We trade fully automated mean reversion algorithms and foreign exchange. And I think for me the most important thing would be to know from you guys, are you the majority shareholders in your companies? And if not, who is the majority shareholder in your companies and what is their background and what is their typical return they look for? And how do they try to reach their targets? If this is not too offensive question to ask from you right now.
Okay, so let's just try and interpret that question into a sort of a general startup. The shareholdings, what do some of the funding people take and what are they looking for? And the sort of returns that I suppose founders who all want to be the next billionaire and whatever else, but through that process. So who would like us to... I mean, far away.
I'll throw something in because actually if you look at this chart over here, there's a kind of assumption, friends, families, fools, and so forth, angels, seed funds, VC Series A, B, C, and so forth. So there's certainly a split that isn't demonstrated there because people can take their companies and go for an acquisition, which, I'm just throwing out numbers here, but let's say they take it to a certain size and it gets acquired for 20, 30, 40, 50 million, whatever currency you like. That's not the route of VC. So, if you're in a company, you enjoy doing what you're doing, you enjoy working with your team and so forth and building up and growing, and you're happy to exit in some kind of acquisition path, then you probably are the master of your own destiny. If you decide to go down the route of VC, then you have to understand that those are people who are going to want to see 10, 20, 30 times their investment back, and they can't afford to let you go down a path like that. So it's something that often isn't that clear to people, that there is this kind of dichotomy of choice. And I often ask people, are you really sure that you want to aim to be, the CEO of 100, 200, many 100 million currency worth of company? Because it's not the same as being in this earlier stage, more sort of family kind of environment. So I think I would throw the question back at you, and sort of you really have to ask yourself who you are and what you want before you choose which path you go along.
So you're saying, effectively you're saying that there are many different routes, and so you can, as a founder, end up being a minority or stay as the majority. But if you take a lot of money, you're not going to be the majority in the long run. Carlos?
Well, no, I was going to actually ask you, what are you really interested in? Are you interested in asset class? Is it an asset class question, or is it how different types of investors look at how these are different asset classes and how that relate to the audience here? I'm just trying to understand the genesis of the question.
I would like to understand the background where you come from, representing the companies, and what stake you have in the company, because apparently I have the majority stake in our company, and I have reasons to do what I do. And I would like you to, I would like to understand the background from you, and understand the implications.
Okay. I'm not that smart, but I read a few things. There's a really good blog post recently by a guy called Fred Wilson that you should look up if you're really interested in this. There are two things. We can talk about what we do individually, but I think what you're asking is a much broader question. So, the Startup Weekend and the Launch 48 guys don't take anything. You come along, you do it for free. It's just about actually getting out there, mucking in, and actually meeting other smart people. Yeah. When you speak to Springboard, we're talking about giving up 6% equity, but that's on the basis that you may choose to go off and do other things, which is raise additional funding through seed funding, through angels and or VCs, and the same, I guess, applies specifically to Seedcamp. Now, if you take that to an extreme, you can look at something like, I always give the example of Google and Facebook, yeah? Massively successful businesses, but the founders ended up with, I think, Mark Zuckerberg ended up with 26% of his business. He owns lots of the controlling rights, but practically he only has 26. I think Sergey and Brin, when they exited Google and IPO, they had 18%. Yeah? But there's a weird dynamic, which is, whilst we're talking about size of equity, there's a thing which is about control and management. And whilst you may have a practical issue of controlling rights and voting rights within an organization, what Fred Wilson was describing was when an organization is doing really well, it's nothing to do with the size of how much equity you own. If you're doing really well, control lies essentially with the founders, yeah? Because most of the VCs back off, investors say you're doing a bloody good job, just keep going, yeah? If, however, the business is going down the shitter, what you tend to find is the controlling interest moves towards the investor, where he's much more interested in how he's going to get money out and or change the management team. And really good example of that is Twitter. Twitter's gone through about 3 major organizations where the founders have been kicked out and other people have been brought in. I describe it like adults, yeah? But interestingly, the original founders have now come back as chairman. So Jack Dorsey's now the chairman of Twitter. So there's this constantly shuffling, but you should not be constantly looking at the underlying equity structure in terms of thinking of control. There is legal control, and then there's practical day-to-day what actually happens in an organization itself. Does that make sense?
Thank you, John. That's grand. We'll take another question just as a thought process from an angel as we're going down the line. You're absolutely right about the control, and angels are going to look for anywhere between 15 and 20%, and then you're going to get that sort of 20-25% dilution as you go down the chain repetitively. But that is no problem as long as the business is going in the right direction. Next question. If there's one over here, Andrew.
What's the most dangerous part of the road?
Oh dear, every part of the road. Yes, right. Cash flow is king. Right. Okay. Right. Well, we'll ask Eric from the start. So, what's the most dangerous part of the road? You start at the start, so and then we'll flow through.
Okay. I hope this doesn't sound too cheesy, but probably the most dangerous thing is that you don't come to the weekend and don't fall through and just see what comes of your idea. I think a lot of people get so attached to their idea, they don't want to share it. They just kind of like, oh, as soon as I, tell people about it, somebody's going to take it or they're going to do something with it. And I think the whole attitude about people who attend a startup weekend is like, you know what, ideas are in the ether. I'm just going to try this thing. If it doesn't work, I'm going to try another. I'm going to keep on trying. It's very much the fail fast mentality. And yeah, I would say that's about it. Aside from that, there's not too much danger, I think, in that first initial process.
Okay, so we'll go over to Ian. We're going to do this in strict order of growth here.
So am I meant to be answering that question in regards to Launch 48?
You can answer it any way you like.
So I think, personally, my experience is that right at the beginning, where you've got no money, and it's like if you say, I'm not getting out of bed today to do this anymore, your idea is dead. There's nobody else who will carry it. And one of the things that I realized when I was chatting with a mate about 18 months ago, his company was turning over maybe 25% more than mine. And we were having a chat, and he said, my sales guys are just not performing, so I hired a consultant who just came in and within 2 days restructured my entire sales team, and now they're like delivering like 50% more than they were. I was like, I've never thought of getting a consultant before. And I think what that highlighted to me is that's kind of like what money can afford you. You start to be able to get people who have more knowledge, and you can start to get them to work with your business, because lots and lots of people will come and work with you for money. So I actually think it's when you don't have money and you don't have any other resources, and it's just you and you're pushing the idea forward, that's, I think, where it's most vulnerable, and it's probably the hardest part.
Jon, a quick answer.
I'm just going to be very left field about this. There's no dangerous part. Yeah, you get up in the morning, you do your thing, you love what you do, and sometimes it works and sometimes it doesn't. Yeah, dangerous is like deep sea diving. Yeah, doing a startup is not dangerous as long as you have your health and you have to look after yourself and you enjoy what you do. There's a really great expression which is Reid Hoffman described starting a business was like throwing yourself off a cliff and building the plane on the way down. Yeah, but actually the reality is you're not going to die because of a startup. I hope not, anyway.
So in an effort to be a right field now,
on balance, I like balance.
So if you took a plastic bag and you put it over your head, you would be able to breathe for maybe 3 minutes, 5 minutes. I don't know. I've never tried it. Before you would eventually like get dizzy, and then you would eventually die. And I think my analogy is, if you are only breathing your own oxygen and you don't network and you don't meet appropriate people and you don't take networking as a strategic value for your company, that's probably the most dangerous thing. A lot of the companies that we have come in to our program have already gotten past the first funding bit because they got our money. So that's not the issue. But when I speak to the ones that are having trouble fundraising later, and I look sort of forensically as to what they're doing wrong, it's because they've been either too focused on product and haven't gone out of the room and building and talked to customers, talked to investors, made relationships, find out who the appropriate sales consultants are, who the appropriate lawyers are. They just don't get that. So I would say that's the biggest fallback, is if you get stuck with a paper bag around your head.
So not enough on the left-hand side, and all of you are going to be fine because you're here, which is a good answer.
Okay, a couple of examples. I mean, just for watching people, when you start and you have nothing, and by the way, I think that a lot of what's going on over here in front of you is, a lot of it is kind of oriented for the first-time entrepreneur. Because if you've done it before, you've probably got a lot of access to a lot of what's available around here without having to go through these programs. So when you're talking about the first time, when you've got no money, then you've got a very, very good discipline of how to spend money. And then when you get money, you lose that discipline, and that's a dangerous point, because actually the first time you get money and now you think, I've got money now, I've got something to spend, that's a danger. So that's one thing that I've noticed. But as a sort of more generic kind of danger, I would say, is being precious. And I think you touch on it there when you say it isn't dangerous. It gets dangerous when you get too precious, and sometimes you have to be able to let go in order to be able to, whether it's pivot or understand that it's time to let go. And that can be a danger when you throwing good money after bad kind of thing.
Okay, thank you very much. And next question, and gentleman in the second row.
Okay, well, thank you for. This is my first event of anything like this. I've been working in finance way too long, and I've kind of got a question more about if I'm thinking of making that leap to the startup community, and so I work in the capital markets, which is quite a constrained industry. I just wonder whether, from the startups that you've seen that have come through your programs, whether they're I think about things like Twitter, and they're quite open, but the capital markets are quite closed. In terms of gaining access to clients, do you see good ideas that are practically not going to ever make any money, firstly, and then secondly, even when getting started, do you find that you have difficulties gaining access? I mean, I work on a trading desk, but do you have difficulties getting access to the brokers and the actual sales traders or whoever who might want to use your products?
So it's kind of, are you talking predominantly there about businesses which are not as open as other businesses,
well,
and how do you get into that?
Having worked on the sell and buy side for kind of over a decade, I know how difficult it is to get technology into a big bank, and I know how IP is protected on the hedge fund side of things, and so it's quite a difficult market to crack, particularly with Bloomberg and Reuters as well, having quite a FactSet or whoever having a stranglehold on those markets.
So be prepared for the long haul. Ami?
Yeah, I don't think I can answer that question really, except to say, to sort of kind of echo back the challenge. I mean, I look at the financial market, I look at the cities, I look at the banks, forgive me, and I see the opposite of innovation, the kind of the depression of new ideas, the depression and the resistance to disruption in case that will have an effect on incumbents. And I think it's, in fact, I think we're sort of sitting in one of the biggest financial centers in the world, and with the brakes on, basically, because there are a lot of vested interests. And vested interest is often one of the biggest resistors to innovation.
So we get that given, how would you, if you did a startup, here's a real hard question. So you've got this great idea, you've got these vested interests, what would be your number one strategy to try and break into that?
Well, I'd have to think about that for a little bit, and you'd have to come up with something. But but what I want to throw back to this community here is to say I think that's something that really, really needs to happen. And a bit like you were saying before, why aren't we lobbying the government? I believe, why are we not lobbying the banks? And why are we not creating more innovation? And a question that I have when I'm in front of a community like this, I see most of you are bankers, is, okay, so you've got an idea. Is it another one of these ideas of how to make money out of these poor suckers out there who, to get another few percentage points? Or is it really about change? Is it really about the next century? Is it really about, new finance and the new world and the new economy and, the end of the sum zero? And, we live in a world with limited resources. We can't overproduce anymore. And, what are we going to do? How are we going to really, really innovate the financial sector in order to, create some kind of change in that?
So, okay, can I say something to that?
I'll hold on one moment, and I'll bring you in. Let's Carlos. Okay.
I think I forget how the expression goes. It's like, join me, help me, or get out of the way. Basically, you're either going to be a startup who has a founding team that has connections that gets them into places that could not otherwise be open, doors that couldn't be open. So those guys are going to get funded by the top tier VCs. They will. So I know there's, like, if I look at the pool of people out there, there are some people that are in that position. Then there's other people that are going to be doing stuff around the periphery of it. Like if you look at Currency Cloud and what they're doing in terms of currency exchange, which opens up a lot of things that otherwise were not possible before. And then you have other startups like Holvi, which is a new type of bank, which is the get out of my way, or like let me do something entirely different, which says, okay, we have loose approval for this kind of banking type structure. It limits us to Finland, and therefore we have a specific type of customer, but for the most part it's a new type of financial organization, and so that's inherently fundable. So if you think about it that way, you're either going to be somebody who's got the appropriate connections, or somebody's going to take a ballsy ass risk and come around it. TransferWise is one of our companies, and thanks, John, for reminding me. TransferWise is
he forgets. He's got so many.
There's an example of a company that is disrupting the way that current banks. If you were to try to hit a bank and say, "Can you lower my tariff on FX?" they would say no, or you would have to negotiate that. Or could you get into that? So they went around it. They said, "You know what? He's got euros, he's got pounds. The founder is ex-Skype. He understands peer-to-peer. So he said, why don't I just do a peer-to-peer fund transfer between these two people?" And so there's an example of going around something. So, I think the point that I'm trying to make is help me, join me, or get out of the way.
I mean, that's an excellent summary. So you're hopefully in one of those situations. Did you want to add?
Can I quickly just add to that? I actually turn the whole thing on its head and say there's a massive amount of people who make a massive amount of money in the financial markets in London. Yeah, anybody who's in a position to create a competitive advantage in that market itself, people do it because they do smart things around algorithms and hedge funds and things like that. That is if you can create an edge, that creates an opportunity. Similarly, we have a team that actually takes public data feeds in overseas countries and translates them and moves them towards brokers or to traders much faster. So China, by way of example, only distributes its GDP numbers on a, I think, 6-monthly basis. They actually get shipping manifests out of China almost on a daily basis. So they can actually be tracking what's actually happening in an export position on a day-to-day basis, giving traders an edge. So there's a whole massive, I turn the whole thing on its head and say, yes, there is. But actually, one of the interesting things about the financial markets is they're super efficient. Yeah? There's a massive level of competition that exists within those marketplaces. And anybody that can give anybody else an edge can actually potentially make a lot of money.
Get to the right place. Do you want to add something, or? Okay, I'll give you.
The financial markets wouldn't be what they were if they wasn't a massive and a huge amount of innovation over the past 10 to 15 years. The electronification of trading, the electronification of just about everything that goes on in banking has been fundamental to the progress of society generally. I mean, in this country, financial services leads GDP by a massive amount, and in fact, you could argue economically the trickle-down effect is what keeps this country vaguely wealthy. The fact is that a lot of people do want to get out of that system. I left the banking system 4 years ago. I earned a tenth of what I used to earn. So it's not always about money. It's also about providing opportunities and seeing the opportunities within banking. I work for the Currency Cloud. I'm part of the founding team there. And I've worked in other startups within the financial arena. One of the biggest issues that financial startups face is the public apathy. You can have a really good proposition. It can be slam dunk. The issue we have in this country is that public policy and the public in general is looking at government to solve all the banking problems, and the banks won't do it. They have no incentive.
I'm going to call it. I'm going to call it there, because otherwise we will end up in a government banking thing. Okay, one more. I'll hold off on that. Anybody else got a question? A last question to throw to this panel? There must be. Yes, another question.
Given the financial sector pays so much, and it naturally attracts quite smart people, we're obviously seeing quite a big brain drain. And you read the papers every day, and the world is going to hell. And one of the solutions is innovation. So do you think that your organizations have some sort of role to play in promoting a better, different way of using that brain power? And secondly, for those people who are working in banks, insurance companies, asset managers, hedge funds, who have that kind of deep domain knowledge and want to get out of it and join this road to freedom, what advice would you give them?
Okay, so there's two sides. So, okay, what would you want to see? I'm going to slightly modify. What would you want to see in the banks or whatever that would help you help them? And what would you say to somebody who wants to come out of that market and start a business? So let's start over. We'll just do left to right and finish off. Yeah, and that gives you a hard question.
To be honest,
you can say you don't know.
So yeah, the banks. I don't know. And what was the other part of the question? The question
what
was,
would you say to someone coming out of that environment and wanting to sort of join this startup environment?
Yeah, so I mean, so I kind of did the same thing. I mean, I've never worked in a bank, but I left the country that I'd lived in for like 25 years and came to London. And partly the reason why I came here was because I knew that the entrepreneurial scene here was so much more exciting than Australia. And I think that the primary way to kind of get ahead in the startup space is to just, you're not going to die, but throw yourself off the edge and just dive in. I mean, part of the actual reason why I started Launch 48 was that I got frustrated that there was nothing around to actually offer what Launch 48 does. So I started something. And I would encourage you guys to do the same thing. But there's so many events. Literally, when I arrived here, every single night of the week I was going to a startup event. I mean, you eventually get a bit sick of them, and you start hearing the same stuff, and eventually you know everybody's name. But that's the beauty of what London can do for you. London is such a massive city. It's got so much going on. I mean, we are just the tip of the iceberg, and there's just so much other stuff. So dive in.
Thank you, Ian. Jon.
Banks don't care. Yeah, they're an incumbent. They're a potential supplier. They just should be viewed like a resource, like any other market itself. So, I think of them as very deep pockets with lots of opportunity on one side and a pain in the ass on the other. In terms of jumping, whatever you want to describe it, if you're doing a startup to make money, you're in cloud cuckoo land. Yeah, it's the last place. And if you want to be an angel investor and make money, being a startup is the last thing you want to do as well. The reason why people do startups is, interestingly, because their brain's a bit wired up their own way. Yeah, it's completely irrational. Why would you give up a good job? It's because you want to have some control over your destiny. You get up in the morning and you decide what you want to do. The interesting thing, actually, I believe, that's interesting about financial markets, which is underestimated within startups. Startups are about risk management. Yeah, it's about, whilst we talk about venture capital as being risk capital, actually most venture capitalists spend their life de-risking and trying to establish what are the things that we know that other people don't know that actually mean that this investment doesn't look as risky as it does. Yeah. Doing a startup is all about risk management. It's about mitigating a whole bunch of risks. That could happen, but we can do this. So people are actually really acutely aware of that within the financial markets. So actually, in some respects, you're actually really well suited to actually doing a startup. And there's a natural point when you go through, I want to start a business, that you can de-risk it sufficiently enough that you're willing to make that jump.
Jon, for time, I'm going to ask you to pass straight on to Carlos.
So the first question is, what could banks do?
To help you out or help startups that you've got.
Okay, so AXA Bank is, I think, one of the first banks that I've seen that has an API. I think that the more banks start playing nice with the way that other services can leverage their data, and whilst not falling short of regulation, is a way for them to stay relevant in the internet era. So that's the first thing. And then the second thing is, if you are in the banking sector, you are likely highly intelligent, and you probably have skewed views as to what makes a company operate, because you're used to, if you were like, let's say, a research analyst or investment banker, you have quite an overview of how the company works together academically, but not from a practical perspective. I think programs like Launch 48, Startup Weekend can give you a very hands-on approach to what it's like to do something. But there's other programs which I would also recommend. One in particular is called Lean Startup Machine, which I think will give you the fundamental knowledge that you would not have about how to go and speak to customers and validate a proposition that you might have, so that it's not entirely just a theoretical thing. And that's probably the biggest value contributor that you could do prior to starting a startup and then just jumping off the deep end and building your airplane on the way down.
Thank you very much. Eric.
I don't know if I could really comment on the first question, but the second one, Yeah, I would definitely say come to a startup weekend, only to see what motivates people. It's definitely not all about the money. There's so many different ideas and reasons why people are there. First story comes to mind is I think one startup idea was I guess there's pacemakers, recycling them. This person had the idea where I guess there's 1,000 pacemakers that just go to waste every year as people pass away, and they're perfectly reusable. And their startup idea was to figure out a system to pass these on to people in developing nations. It sounds funny. It's not going to scale, but these people just wanted to get those 1,000 pacemakers, which costs, I think, I don't know, let's say 40K or whatever, pass them on to people in developing nations that to save like 1,000 lives a year. And you see a lot of those kind of ideas where it has nothing to do with the money. It has to do with wanting to just do something that has meaning, or just have autonomy over what their day is about, or just because they have a passion for something. So yeah.
Thank you very much. And Ami, closing words are yours, but keep it brief.
What was the second half of? What was the second half of the question?
Second half was
what should the banks do?
What should the banks, or what could they do to help any of the businesses you know, and what would you say to a banker coming out and wanting to start up a business?
Well, I mean, I'm stuck with something that I should have said in answer to one of the other questions, which was something about the dangerous thing, and I forgot to say it gets dangerous when you get into debt and you mortgage your house and all your life savings and everything. That can be a bit dangerous, especially if you go over. So it might be quite difficult to dig yourself out of that. In terms of the banks, I'd like to see the banks lend money. I'd like to see them lend money in the way they used to lend money in the 50s, not against a checklist, but against a kind of human capital. And I'd like to see them, allocate some of their profits or a certain part of their portfolio to this sort of higher risk, not guaranteed, not secured lending that will help people basically overcome cash flow issues in order to grow their businesses or recover their businesses. So that's what I'd like to see the banks doing. In terms of what I'd like to ask them to do, I'd like to ask you guys to come up with, well, a lot of the people that I've spoken to in the banking sector, they tell me they're traders or they're this or that, and they talk about how what they do is they sort of create money or something, but they don't actually create any value. And all of these highly talented people who are in the business of preserving wealth, but not actually creating anything.
So I'm going to stop that there. So
That's what I'd like to ask
before we go too far. So creating wealth. I hope you found that useful. We're going to call that quits now on the panel, but of course the panel will be around. I'm not sure if they can all stay to the end. So thank you very much, panel. Over to you.